Hello everyone, welcome to the subject F7, and today we will be learning about impairment of assets. Now, impairment of assets falls under IAS 36. Okay, now let us first start with what actually is meant by the word impairment. Now, impairment simply means that there is a fall in the value of the asset. Okay, please don't confuse impairment with depreciation. Depreciation means we are spreading the cost and the residual value of the asset over its useful life, while impairment talks about an actual fall in the value of the asset. Now, how do businesses know that there's actually a fall in the value of the asset? Basically, the major indicator is that now we cannot get any income from the asset. IAS 36 tells us to calculate impairment by comparing two things. Okay, we are going to compare two things: carrying value and a recoverable amount. Okay, now when impairment takes place, carrying value is greater than the recoverable amount. From our previous IAS, you should know to calculate carrying value, we simply use cost minus accumulated depreciation. Okay, now when it comes to recoverable amount, we compare two things. One is the fair value minus cost of disposal, or you can say cost to sell. Yeah. And the other one is what we call it value in use. Now, value in use simply means that it is the present value of the cash flows. Okay, now you might be wondering, what cash flows are we talking about? Now, this is the cash flows which we can receive when we use the asset. Okay, now the word PV or present value talks or states that the value of money goes down by a certain percentage. Okay, so when it comes to present value, we will be always dealing with something called cost of capital. Okay, now let me summarize it what we have learned so far. Impairment of asset talks that there is a fall in the value of an asset. Now, IAS 36 tells us that an impairment takes place when the carrying value of an asset is greater than the recoverable amount of the asset. Now, how do we calculate carrying value? This is your cost minus accumulated depreciation. And recoverable amount talks about two things. One is the fair value minus cost to sell, and the other one is the value in use. Value in use talks about the present value of the cash flows. Okay, now you might be wondering, recoverable amount, there are two things: fair value and value in use. Which one do we take? We will take the lower one. Okay, supposing my fair value minus cost to sell is $15 million, but my value in use is $12.5 million. This means I will consider the value in use. Why? Because it is lower. We take the lower of these two. Let's try doing an example to make things clearer. Okay, now let's try doing this example to make things more clear. During the year end, a machinery had a carrying value of $80,000. The market value was $78,000 and the cost to sell the asset is $2,500. Now, the asset can generate cash flows of $30,000 per year for the next 3 years. Cost of capital is 8%. Calculate the impairment. Okay? Now, let me repeat again. When it comes to impairment, we compare two things. One is my carrying value. One is my recoverable amount. Yes? Now, according to this question, the carrying value is already given. It says a machinery had a carrying value of $80,000. Okay. Now, when it comes to recoverable amount, usually we are always told to calculate it. Remember, recoverable amount, we compare two things. One is the fair value minus cost to sell, and the other one is what we call value in use, which is the present value of cash flows. Remember, we will take the lower of the two options. Now, let us first calculate the fair value minus cost to sell. Okay? Remember, fair value talks about market value, meaning if we buy that asset today, it will be in that value. Okay? Market value was $78,000 and the cost to sell the asset is $2,500. Yes? So, let's see. Recoverable amount talks about fair value minus cost to sell. and value in use. Okay, now according to the question, my fair value is $78,000 and my cost to sell the asset is $2,500. Yes? So, this will lead to an answer of $75,500. Now, let us see our value in use. Value in use is the present value of cash flows. We are given a cost of capital of 8%. This means that the value of money will go down by 8% per annum. Now, the asset can generate cash flows of $30,000. So we know our cash flows, but how do we actually discount it using a discount rate of 8%? Let me just explain it first in the next slide. Sorry. Yes. When it comes to discounting of cash flows, some scenarios you are already given the rate in which the money falls. But what if we are not given? Then you must calculate it by yourself. Okay, sorry. Okay. Now, in this scenario, we know that the discount rate is 8%. But if you can see that it is 8% for 3 years. Why 3 years? Because we will be generating cash flows of $30,000 for the next 3 years. In that case, we will be using this formula. This is what we call the annuity formula. One minus 1 plus r to the power of minus n divided by r. Okay, r is your discount rate. And n is your number of years. Okay, now this will lead to an answer of minus. Okay, now this will go with the rate of 2.577. Okay, now what does this actually mean? Now, we have cash flows of $30,000. Yes, now my discount rate is 2.577. This means that my present value of cash flow is 77,310. Now, what does this simply mean? Okay, the asset can generate cash flows of $30,000 per year for the next 3 years. Now, logically speaking, you would think that, oh, if I get $30,000 per year, in 3 years it should be $90,000. But you see, as time goes by, the value of money goes down. Now, it will go down by this factor. This means that in 3 years, it will actually, that $30,000 won't actually get $90,000, but it will get us $77,310. Okay, now you might be wondering, why is the value low? This is because that as time goes by, the value of money goes down. Okay, now so this is what we call our value in use. $77,000, 310. Okay. My value in use is 77,310. Now, recoverable amount, we will take the lower one. From this calculation, you can see that the fair value minus cost to sell is actually the lower value. Yes? So now, how do we calculate impairment? Now, impairment loss. We will see my carrying value is greater than my recoverable amount. My carrying value is $80,000. Yes? And my recoverable amount, which we take the lower one, is $75,500. This means that there has been a loss impairment. Of $4,500. Okay, so this will be your answer. This simply means that now the value of my asset is going down by $4,500. Okay. Let's see. Now, what do we actually do with impairment loss? We will do two things. First, we will expense it off in the profit and loss. And we will deduct it from the carrying value of the asset. Now, why do we have to deduct it from the carrying value of the asset? As I said earlier, impairment means that there is a fall in the value of the asset. Now, applying the prudence concept, we do not want to overstate our assets. That is why we will deduct it from the carrying value of the asset. Okay. IAS 36, we learned something called cash generating units. Now let me first explain why this came up. You see, sometimes the recoverable amount of an individual asset cannot be measured. Now, when a scenario like that pops up, we use something called cash generating unit to identify the recoverable amount. Okay, by definition, okay, by definition, this is the smallest group of assets in which independent cash flows can be identified and measured. Now, as I said before, the recoverable amount of individual assets cannot be measured. So this is why we take a group of assets. Okay? Now, when it comes to the impairment of CGU, we still follow our basic rule. We compare two things again. One is the carrying value of the assets. This is the individual assets, of course. And the other one is the recoverable amount. Now, once we find the impairment of a CGU, remember, okay, CGU consists of various assets. Now, how do we allocate impairment to each of the assets? IAS 36 gives us a rule on how to apportion impairment. Sorry, cash generating units, I mean. Okay, now we have to follow this particular order. Now, once we compare the carrying value and the recoverable amount of cash generating unit, we will get the impairment. Now, this impairment is basically for the whole group of assets. Now, we will have to allocate impairment to each asset. But in which order? IAS 36 tells us that we first should allocate impairment to assets which are destroyed. Supposing if the carrying value of the asset, say, is 20, okay, and we have an impairment loss of 50. This means in the asset which is destroyed, I have to first allocate the full amount of 20. Now, once I allocate it to assets which are destroyed, I will then allocate it to goodwill. Goodwill, we will also allocate the impairment by the full amount. And the remaining, we will allocate it based on a pro rata basis. Now, let's do an example to make things more clear. Now, let's see this example. A cash generating unit consisted of the following. Remember, cash generating unit means it's a group of assets. You see, now we do not only have one asset, but we have 4 different assets. We have a plant of 20, machinery 25, goodwill of 10, and current assets of 11. Our total assets will be 66. Now, following an impairment review, a recoverable amount of 50 can be obtained from the assets. Allocate impairment to their respective assets. Sorry. Now, say this is carrying value, okay? Now, remember, when it comes to impairment, we compare 2 things. My carrying value and my recoverable amount. If you see from the suggested scenario, we have a total carrying value of 66 and we have a recoverable amount of 50. So can I say that actually we have an impairment loss of 16. Why? Because now my carrying value is greater than my recoverable amount. In this scenario, you see, we do not have to calculate the value in use or the fair value minus cost to sell. Why? Because the recoverable amount of 50 is already given. If I compare these two, I will see that I actually have an impairment loss of 16. This means that the value of my assets is actually going down by 16. Now, these values are for the group. Total 66 is for the group and the recoverable amount is also 50 for the group of assets. So how will I allocate them? Now, going to our previous notes, we can see that we have to apportion impairment. We allocate impairment based on these criteria or these order. First one is to assets which are destroyed. Now, the example that we're doing, it does not indicate that any assets are destroyed. So this means that next I will allocate impairment to goodwill. And then it's to non-current assets in a pro rata basis. Say I have a carrying value, I have impairment. I have plant, machinery, goodwill, and I have current assets. Now, how much is the value? We have 20, 25, 10, and 11. Okay. 20, say, 20, 25, 10, and 11. We have a total carrying value of 66. Now, I know that actually I have to allocate an impairment of 16. Based on our calculation above. Okay? Now, remember, our order said first it will go to assets which are destroyed. In this scenario, it does not indicate that any assets are destroyed. Hence, we move on to goodwill. Okay? I will allocate impairment of 10 to goodwill. Yes? If we have sufficient amount, we will first deduct it from goodwill. So can I say now that I actually have 6 left of impairment? So How will I allocate the 6? Now firstly, do I have to allocate any impairment to current assets? No, okay? It says here that we will only allocate the remaining to other non-current assets. Yes, let me underline this. So let's see now. How does a pro rata basis work? Okay, now when it comes to plant, this is how I am going to allocate my impairment. Plant has a carrying value of 20. Now, as I said, we do not allocate impairment to current assets, so I cannot take into account of 11. And I cannot also take into account of 10 goodwill. Why? Because I've already impaired the full amount. So can I say that now I have a remaining of 45? Yes. And my impairment, the remaining one, after deducting goodwill 10, is 6. Hence, I will allocate 2.67 into my plant. And how about my machinery now? It will be 25 divided by 45 multiplied by 6, which is 3.33. Okay, so this means now I have allocated all 16 of impairment loss to the individual assets. Okay, remember, first one is to assets which are destroyed. Next one is to goodwill. Remember, goodwill is by the full amount. And the remaining one we will allocate it to other non-current assets in a pro rata basis. Yes, this is what you call pro rata. So now what will be actually the value of my assets now? My plant will be 17.33. My machinery will be 21.67. My goodwill will become 0 now, and my current assets still remain as 11. Okay? So now, remember this. Cash generating units means it's a group of assets. Group of assets, this means that why do we need a cash generating unit? This is because we cannot identify a recoverable amount for each asset. Like you see in this example, we actually know the carrying value of each items. We know the carrying value of plant is 20, of machinery is 25, goodwill is 10, and current asset is 11. But the recoverable amount is given for a group of assets of 50. Now, when it comes to cash generating units, we calculate impairment with our following method: carrying value and recoverable amount. We compare these two. Now, we can see here the carrying value is greater than the recoverable amount. This is an indication of an impairment loss of 16. Now, we will allocate the impairment loss based on the following order. First one is assets destroyed, sorry. Next one is goodwill, and the other one are on the remaining assets on a pro rata basis. Remember, current assets will not be impaired. Okay? So now, what happens when in this year, supposing there's an impairment loss, but in the next year there's an impairment gain? Okay, now in that scenario we will recognize say the gain in the profit and loss for this current year. Okay, and now we are in the carrying value, in the non-current assets, we will put the recoverable amount of the asset. In the statement of financial position. Okay, now just few notes here, additional notes when it comes to IAS 36. Impairment tests has to be done on a yearly basis. Okay, now how do we do impairment tests? Yes, we will compare the carrying value and the recoverable amount. Okay, remember when it comes to recoverable amount, we talk about two things: fair value minus cost to sell and the value in use. Value in use talks about the present value of cash flows. And when talking about present value, there is something called cost of capital to consider. Remember to use the formula which was given earlier on top, but let me just show it again. Okay? The annuity formula is 1 minus 1 plus r to the power of minus n divided by r, where r means the discount rate and n is the number of years. Now don't worry, the discount rate and the number of years will already be given in the question. Okay. Now, the second thing to consider when it comes to impairment is that it should be done to the whole group of assets. Okay, this means that supposing if you have 10 machinery in your business, and if you want to do an impairment test on one, you should do it in all of the 10 assets, okay? Whole group of assets. Okay, now this is it for your IAS 36. If you have any questions, please feel free to send an email to this following address. Okay, thank you for watching this video and hope to hear from you soon.